Hello, everyone. Welcome back to the RationalInvestor.com School for Trader Development. Dun, dun, dun. Here we are in our Trader Elite, our level 2 program. And looks like we're rocking the YouTube page, so that's good. This is a fairly large class, so I don't know if we actually have everybody show up for class. It might be a bit tacky having everybody in the Hangout, but if I see that the YouTube participation is below the Hangout threshold, I think 25 is the max for these Hangouts. Then I'll post the Hangout link like I did in the classroom here this morning. So I think we're good to go. By all means, if you are on YouTube and you want to pop in, I think we got enough space here. I can see a bunch of students all piling in. So good morning, everybody. Welcome back to class. Zach has been telling me that we have just an absolute mountain of questions to get through. So we probably should just get ready and get to work ASAP and not delay. So why don't we just jump right into this? And I'll go through this relatively quickly. I'm not going to dilly-dally because, like Zach said, we got a lot of questions to attack here today. So this is our week 2. We actually combined two pretty big concepts. I could argue that we could actually have broken this module into 2 separate modules, but there's so much information that we have to learn here through these programs. So I smushed together these 2 concepts together into one module. And also 2, I know you guys are chomping at the bit. You want tools to use. You want to, keep adding to your tool belt. So in essence, right out of the gate here, boom, we've given you a whole bunch of stuff to work with. So I hope to see all of you guys applying these concepts right from the get-go. Of course, you've gone through the level 1 program, so you understand what building setups and vetting your setups looks like. And hopefully what ends up happening here is we just keep adding more tools and concepts that, validate levels. And if you want to add these criteria to your existing setups, totally fine by me. In fact, one of the concepts that we learned this week, trend line breakouts, I think works really, really well juxtaposed with the bot setup. So I think the 2 of them work really, really nicely together. So right out of the gate, we give you more tools to help you sort of see setups developing and have confidence in the setup working right out of the gate. So anyway, okay, so here we are back in class. It is a little past 11 Pacific time. We'll try and go through till about 1 o'clock. I do understand that there are a lot of questions. So, if we have to spend a little bit extra time just making sure we get through all the questions, so be it. And Zach, of course, has volunteered to answer any questions that I just don't feel like answering. Right, Zach? Just kidding. Just kidding. But anyway, as you can see, Zach is here in the call. And awesome resource for you guys to lean on. From what I understand, he has been interacting with you in the chat room. Totally awesome. Way to go, Zach. And if I'm not around at any time and you have a question, lean on Zach. He's a very, very nice person. Totally awesome karma. And I think an excellent resource for all of you. Also, too, and I don't know whether you guys are aware of this or not, but James, who is going to be our TA for the level 3 program this term, he and Garrett also run a level 1 study group, 101 study group, and they periodically just throw hangouts together just to talk about concepts and stuff. And I was actually in one of their hangouts yesterday. So if you do want an environment where you can constantly go back and review level 1 material, and James and Garrett were both TAs in the program, and you'd like to have that continuing resource, please understand that is available. And I think the group is this level 1 study group. 101 study group. So if you aren't, and I'm not quite sure how I would add you, but if you're not part of this group and you'd like to be part of this group, maybe just PM me and I'll manually add you to this group. But just more resources to help you guys, because you're in a very delicate phase right now. They always say, oh, good. So Julian did do that for you. Awesome. They always say that, a little bit of information is actually extremely dangerous. I worry that, and some of the feedback that I've gotten is we need to, maybe crisp up our level 1 concepts a little bit more. We really need to crisp up risk management, make sure that's nice and tight. We need to crisp up things like target determination. What's a realistic target? What's maybe asking a little too much? And go slowly here, guys. That evolutionary process of all traders. I appreciate that you guys all think that you're all trader rock stars now, but you're not babies right now. I think you are sort of at this stage. You're toddlers. You're just learning to stand on your own 2 feet. You're going to be walking around, and you're going to be bumping into things, and you're going to be falling down. So we don't really need to be running at this point with you guys. And any of these kind of supports, like I said, like that level 1 group, they're constantly doing hangouts and stuff and just reviewing. Just lean on the site veterans. These people are they're fantastic people. And we're all here to try and help you. Okay, so let's get to work. First off, let's pop into the quiz. Hopefully I get all these right, but if I get 1 or 2 wrong, please forgive me. In simplest term, what does a price chart tell us? Where supply and demand dynamics change? That sounds good. Who is buying and who is selling? That's incorrect. Where the smart money is trading? Well, maybe. Why I should buy or sell? Absolutely not. So really, the only thing that a chart really tells us, and the only thing that's really important, is where the market pivots, because that's where the supply and demand dynamic changes. And really, as traders, that's really the only thing that matters to us. Who puts pivots in the market? Institutions? Maybe. Public? Absolutely not. Media? No way. Government? Ha. So we have to understand that it's the institutions that actually drive these pivots. Next one. What is the term learned in level 1 to describe institutions placing pivots in markets? And really, this is, you remember back to the FIBS tutorial in level 1. This is this institutional fingerprints concept. Stupidity, that's all about overbought, oversold. Divergence, that's all about indicator information. Structure, that's all about M's and W's, triangles, heads and shoulders. So really what we really wanted you to take away from that is, can you connect the dots with that horizontal support and resistance concept and this idea of institutional fingerprints? Why would institutions paint tops, bottoms, and then run those lows or highs in markets? And the simple fact of the matter is that capitalism sometimes is evil. This is all about money. At the end of the day, a trade, whether a retail noob gets stopped out, institutions don't give a shit. They just want your money. So quite often what we'll see happen is institutions will, they'll even create M's and W's in markets, saying, okay, buy a little bit more, push the price up. Okay, back off, bring the price down. Okay, take the price back up a little bit more. Okay, now back it off. And they will actually paint charts exactly the way they want it. Okay, now we've got that M in there. This is at a really weird location, but the retail kids, they all love M's and W's. So we're just going to make this look like a market top. But really what they're doing is they're trying to create liquidity pools. And it's a brutal reality of trading. You have to understand, especially if you're trading things like Forex. I see this repeatedly in Forex. Not so much with, big exchange traded products, because keep in mind, painting the tape, creating charts, that's all about manipulation. And technically, if you're on an exchange, especially like futures markets, and regulated stock markets, that's a big no-no. Not allowed to do that. But something like Forex, sadly, also crypto, which are unregulated markets, you have to understand that people will do things to charts to actually get you to make the wrong decision. It sucks. It's brutal reality, but welcome to unregulated capitalism. Okay, what is the term used to describe building a complete horizontal support and resistance study? Jacking up, freaking out, tricking out, burning down the house. And I'm just sort of having fun with some of these answers. But, I like to call this tricking out your charts. It's just Brian's terminology. But that's what I was looking for. So if you ever hear me on the site talking about tricking out your charts, well, that's what I'm talking about. Okay, the term TRI uses when you see multiple horizontal support and resistance lines at the same location. I like to call those clusters. Party pits? I don't think so. IFPs, we already know what that is. Confluence? Not really. So what I'm really looking for is clusters. And actually, it's really interesting because I'm running a crude oil day trading model. And even with today's price action, we had a really good example of how horizontal support and resistance came right into clusters here. Right. So this is the crude oil chart. And you can see all the horizontal support and resistance levels. And you can see how we had this cluster of 1, 2, 3, 4 lines. And if you look at it, you can see how the market came into that level and then snapped back. So day trader, pit trader, they love this idea of clusters. Works really, really well. So really cool sort of just working example there. And of course, probably something that I forgot to load, but we should probably have it on here is, where is it? Crypto. I think I have it in here. Here it is. Tricked out horizontal support and resistance. So ideally, this is actually what I'd like your charts to ultimately look like. Keep in mind though that if you're working off a laptop, you have to be careful not to blow up your computer because this is very memory intensive. Let's just so we have this handy. All right. Man, so many lines, can't even see the buttons. There we go. All right, so that's basically what we're going to be talking about here today. But this is yeah, okay, sorry. All right, so we're looking for clusters. Okay, what is the term TRI uses when you see no horizontal support and resistance? Hopefully you got from the video. I like to call those air pockets. And also too, good example, when you get into air pockets where there are no support and resistance lines, you can kind of see support, 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 support. This is really an air pocket. So if we accept this level, where are we likely to go to? And boom, you can see we ran right into another cluster. And then we lose these levels. Where do we come back to? Boom, right back to another cluster. Works really well. All right, so air pockets. Next question. Does TRI recommend using the same thickness color lines for different time frames on your charts? Obviously, the answer is no. I think it helps you if you do different colors and different thicknesses for different time frames. So it helps you sort of see the significance of the higher time frame levels. All right. What market in transition concept learned in level 1 corresponds with horizontal support and resistance? Interestingly enough, I mean, you could argue that almost all of these two, but really good example. I think probably the one that I'd like for you to take away from this is if you think about horizontal support and resistance and head and shoulders and the neckline failure. Let's see if that's what I'm looking for. I suppose you could also argue market structure as well has it in there. So I think I'm going to, and I wouldn't have a problem if it was either of those, but I think I was looking for market structure, right? And really think M's and W's. The top of the M's, the two peaks, that's clearly horizontal support and resistance. And the failure of the middle of the M is also horizontal support and resistance. All right. What trade location concept learned through level 1 corresponds well with horizontal support and resistance? We didn't learn trade location. I sure hope you learned trade location. All the concepts and reload zones. Well, reload zones often work well with horizontal support and resistance. And what you're going to find is that, and actually, I think the Bitcoin chart, I even posted and tweeted it out yesterday, sort of counseling people like, where can we expect the market to come back to? Here's really, really good example of, I think I did it off the daily charts, but it might have been the weeklies. Where, people were asking me, where, if the market was to crap out, where is it likely to crap out to? You notice that reload zones lines up nicely with these IFPs here and the original market structure breakout level. So, you can even see, I said, do you want a stinky bid zone? Well, it's right between this horizontal support and resistance and this horizontal support and resistance, which just so happens to be in the moving averages, which you guys will do in a couple weeks, which just so happens to be right in a MUOC on the volume profile, which you guys will do in a couple weeks. But also, too, you can see we have a trend line here as well. So this represents a huge support area right down in that zone right there. And I think the ETH chart is even better. So, and really the only trade location tool that we really taught you in the level 1 program is reload zones. So I would imagine that's the answer I'm looking for. Yay. Okay, what concepts validates a trend line? And this is a tough one for a lot of new people to trading, in that I often see new people, they just draw trend lines willy-nilly. Hey, there's a peak here. Let's draw a trend line there. But actually, the difference between validate and potential and confirmed trend lines is this idea of market structure. And in essence, if you understood that market structure message from the level 1 program, then you should all be really good at drawing trend lines. All right, next question. What should you do if you don't have market structure to draw a trend line? And the interesting thing for level 2 here, of course, is we're going to be doing GAN. And this is really a GAN concept, 1 unit of time for 1 unit of price. But the bottom line here is we might as well break your cherry now and get you working with 45-degree angles. But in essence, the answer I'm looking for here is if you don't have market structure to work with and you want to draw a trend line, how do you do that? And the answer is 45-degree angle. Okay, what do you have to make sure to do if you want to draw angles? And this, it's interesting using TradingView over the past 4 or 5 years. This has been an ongoing battle with TradingView. You guys are actually really lucky now because there's a whole bunch of built-in tools on TradingView to square and scale your charts correctly. There never used to be, and man, this used to be a major headache. But the answer, of course, if you want to draw angles, and of course you're going to be getting into this in detail in GAN, is you have to make sure that your charts are squared, or think of your chart as a piece of graph paper, and the little boxes on the graph paper never change. They're always exactly the same. Unfortunately, computers trying to sort of adjust all the data to fit our screens, the computers will actually adjust the squares of the piece of graph paper on their own. And unfortunately, that really screws with that whole idea of 1 unit of price and 1 unit of time. right? How many tests of a trend line does it take to validate it has been broken? And the answer we're looking for there is 3. Where should you look for market structure signal develop on a trend line break setups? This is all about Leanne James. We used to call this Ron Jeremy. Unfortunately, that name doesn't really resonate very well with the ladies of our community. One of the ladies in the previous term, and she's actually a veteran on the site now. She's taken all the courses, and she actually wants to run one of our stock trading groups, the retirement account groups. So long and short of it here is she wasn't impressed with that name. So I said, fine, I'll change it to your name. It is now an LJ instead of an RJ, which is fine. And it's amusing. But the long and short of it is she absolutely loves working with trend lines. And so long and short of it here is it's really dangerous to take a trade at a trend line because everybody else in the world sees exactly the same trend line. And then remember, we talked, just earlier on today, a lot of institutions also know that the public sees those same trend lines. And so they might monkey around with price around those trend lines to see if they can wash you out. So the bottom line here is we have to let the trend line be broken. And then on the other side of the trend line, we get market structure to frame your risk. Okay, should you ever consider taking a trade on a trend line tag as your only reason? Absolutely not. Key pivot high to key pivot low trend lines would tell you about future what? Now this is, you just have to sort of mentally visualize this. So if I'm drawing a high to a low, then that's probably going to tell me about support. But I could have this wrong if I haven't mentally. So key pivot high to key pivot low should tell me about support. Did I get that right? Yeah, I got it right. Good. That could have been embarrassing. Okay, how many points does it take to draw a correct trend line? Oh, isn't that interesting? Didn't we just have this? Trend channel, beg your pardon. Not even reading it right. And the key here with trend channels, and most of the time when most people fail with drawing trend channels, is everybody can draw a trend line. I can play connect the dots, do. But where am I going to draw the top of this channel? And a lot of people will draw the top of the channel off of that high there, but that's actually not technically correct. Actually, your trend channel is actually off of the most recent rally peak. And interestingly enough, this dump from here to here actually defines the channel. So in an interesting sort of way, I actually wouldn't be surprised whatsoever to see Bitcoin price rally up and tag this midpoint of the channel and then ultimately exhaust itself up against the top end of the channel there. But TI isn't confirmed yet. Well, this trend line will be confirmed if we go through this midpoint right here, which happened to be right there. Yeah. And interestingly enough, you can see that the market seems to be respecting that uptrend line. If we lose this level, look out below, right? Now, do we take a long or a short just based off of the trend line tag? That's a bit dangerous, especially if you're thinking short. I might even suggest that you let the trend line be broken. And then if you're thinking short, hunt an M on the other side. Longs, I guess I don't have a problem with you taking a long on this trend line tag. What I would prefer, though, is, if you're waiting for this, boom, it's confirmed. Notice that this trend line tag here lines up with this market structure level. So that's okay. At least you have two solid reasons. But the long and short of it here is the question specifically is how many points do we have to draw the channel? And you notice it's 1, 2, and then the key is where is number 3 drawn off of, and it's drawn off of that previous high. So 1, 2, 3. Well, I don't know whether this is probably the forwards. Okay, coin forward, so it might be different than your cash market chart that you're looking at. So that might be the reason. Okay, let's keep moving this train forward. Hey, I got 100%. Way to go, Brian. Woo! All right. Now let's get into the Q&A because I know you guys asked a ton of questions. So we've got about an hour and a half to attack these. Let's get to work. Did we? I think we answered these. Eh? Yeah. Okay. I see lots of timestamps. All right. So here we go. Get ready, folks. Oh, did you put that link in there, Zach? If so, thank you very much. Appreciate that. Good. Awesome. Okay, topic specific questions. In regards to trade setups, are trend lines considered momentum? I would, yeah, that's a tough one. I'm going to say no. In the chart below, you have RLZ structure, and the trend is the third reason to take trade. And the trend line can also be used as location. That's a tough one. I'm gonna say that I would consider trend line breaks. Where would they fall? I think I would actually prefer that they fall under sort of trade location tools. Kind of like here, if I was thinking about getting long, what are the odds that this is a reload zone? What are the odds? Oh, actually, this one here a little bit better, right? I think I would be inclined to add trend line levels under the trade location tool, sort of criteria 3-step, if you will. I think that's where I would be inclined to add them to. I don't think I would consider them momentum. If anything, when we do moving averages are sort of the ultimate proxy for momentum in this particular case. I think I would prefer that we use trend lines probably as location tools. And interestingly enough, this level 2 program, we're going to be really heavy on trade location tools, right? You could make the argument trend lines, horizontal support and resistance, gaps, volume profile, GAN angles. All of these are all trade location tools. So interestingly enough, in sort of like the level 1 program, we were very heavy on structure, momentum, divergence, indicator confirmation. We really only gave you one trade location tool in the level 1 program. I would argue that this level 2 program is much heavier on trade location tools. All right, so I hope that helped answer that question. Number 2, regarding horizontal resistance, I am more of a swing trader utilizing weekly, daily, and 4-hour charts. I never look at the 15 or 30-minute charts. How do I use these lower time frame for swing trades? Seems more useful for day traders. From Zach, for swing traders, lowest time frame for setting trade up is 4-hour. You could use hourly for hunting structure, but trade location indicators will mainly be taken on 4-hour or higher. Daily, weekly is more position trading, lower time frame like 30-minute, 15 minutes, day trader. Yep, basically reiterating what our basic TRI message. Thank you, Zach. I would also say too that kind of like what we showed here. There's no reason why you can't be hunting like weekly levels and daily levels for swing trade ideas. So this is like the big weekly chart. And the weekly levels off of here, you can see I've done in sort of this orange color. And, you might, see, say the market, for example, come into these weekly levels, there's one there. Market's coming screaming down. It obviously went beyond it, but once we've actually come down into these weekly levels, there's no reason why you can't put on your spidey senses off of, say, the 4-hour and be looking for setups to trade that. Also, too, like this is probably a really good example. We've got daily, and weekly, which creates a cluster. So could you drill down to like your 4-hour? And, just for argument's sake, that's the 26th of March, 2018. So you're Mr. Swing Trader. We'll pull up that 4-hour chart and let's just see what price action did through that window. This might take a minute. Or maybe a couple minutes. All right, so March 26th. So that is right through here, right? March 26th. Did I get that date right? You have to go to options and would take you there. Okay. Not quite sure what you're saying there, Owen. Let's just make sure I had that date right. Go back up here. Was this it here? March 26th. All right, so we had cluster here, 1, 2, 3. And then we go over here. March 29th, March 26th. That weird, looks different. I don't need that right for now. All right, so you're Mr. 4-hour trader. Here, I think that's that cluster right in there. Swing trader might be a little difficult for you to have taken a trade off of that, but you can see that cluster. I might even argue that we come down. There's another level there, a weekly level. You could have hunted along through that. Then, of course, we rally up. Here is probably a really good example of a swing trade for you. If you threw on your momentum indicators, do we have any signs of turn through here? Hopefully, swing trader, you can see reload zones right in here, 78.6. There's that weekly level, pretty important level if you ask me. We also have, this I think painted as like a daily level. So super important. We've got reload zone. We've got, a weekly level, daily level. Can I be hunting setups through here? Don't see why not. Same sort of thing, swing again here. Now you have this 4-hour level, weekly level. There's the reload zone. So you can see nice little potential trade setups through here. So hopefully that gives you a good example where this was a weekly level. This was that big cluster that I talked about down here. But, it shouldn't surprise us. Hell, swing trader, if you were really focused, you see, this cluster market snaps back, rallies up, runs into this cluster up top here. Could you have been hunting divergence off of here and any sort of signs of failure? There's a nice inside bar to take a short there. And then conversely, coming back against these lows, there's a weekly level there. There's reload zone. Can I hunt longs through here? Was there signs of divergence through here? Nice little inside bar, sets up a trade. All right, I missed that one. Notice the counter trend rally. Is there a divergence up into here that sets up maybe a short here? That's a tough one. That would be more like day trader. But market pulls back against these lows. Now we have a reload zone within a reload zone. Again, we've got cluster reaction here. You can see a number of horizontal support and resistance levels. Could I hunt up a swing trade through here? I think so. So hopefully you see that. And then also too, as swing traders, you could have said, okay, well, it looks to me like market's getting overextended. So bot setup, did we do 33%, but no more than 66? Yeah, that's correct. So can we set up a bot swing trade? Keep in mind, this is a 4-hour chart we're looking at. So there's the bot entry. So could you have taken this trade to help you swing trade that move? Move stop to trailing, so you're starting to lock in profits. I don't even know what happened here, but if you had pocketed this win here, I don't think there's anything wrong with that. So hopefully that helps illustrate how we use horizontal support and resistance levels to validate things like reload zones and other trade setup tools that we're using. Does that make sense what I just said there? I don't know who asked that question, but I hope that helps. Maybe we can put a time reference there. Zach, are you keeping track of the time here? Anonymous Kraken. And by all means, oh, you did? Oh, yeah, there it is there. Duh. I'm silly. Okay, so let's keep moving on because we got tons of questions here, but hopefully it helps answer your question. Okay, in the chart below, I'm not quite sure where the chart below is. Can you explain again how trend A gets invalidated by trend B? And why not draw trend B from the highest peak, i.e. the first point on trend A? Okay, now what the heck are you looking at? Is that this? Maybe that's that. The issue here is that, yes, you could draw a trend line off of A to this point way over here. But the problem here is that this high is actually higher than that high, if I'm not mistaken. So, and you can see I've sort of drawn a line off of here, boobity boo. I do know that, and I have drawn this trend line. It's interesting over time how price did respect that. But I don't know. I see a lot of people make this mistake, right? I would make an argument that, yeah, you could draw a trend line off of those peaks. And it would be validated here. But if this high is higher than that high, then technically that's not exactly correct. Now, the interesting thing about this is, what did the actual futures contract look like? Was when the price action actually did happen, was this particular futures contract actually higher than that price? That's another question altogether. I do really like this smaller trend line, and this is really what I'd like of you to have focused in on, is this trend C, and you can see how important that was there. So, this is sort of nuance. And I'm just going to simply say, for my comfortability, I actually really like drawing, yes, this is a trend line here. But as we go forward over time, this trend line it's not necessarily invalidated. It's just that price has moved away from it. And so for price to actually validate that trend line, price has really got to collapse all the way back down here. And you probably just won't see it. So as a result, this trend line sort of dissolves over time. And where is significant resistance now on this chart? And I would just simply draw it off of whatever the highest peaks were. So you can't use this one because this high is higher than this high. And interestingly enough, if you actually draw a channel from here to here, here to here, I think these lows actually correspond with that same line, like they're parallel. I think that was the crude oil chart. Maybe I'll just do up a new one. It's a tough one. And really the irony of it all is that really in a market like this, where you have this spike top here and the market structure really isn't framed very well, ironically enough, the actual best trend line would be that 45-degree angle. But I just wanted to draw the actual structure lines. but it's messy. That's probably the way that I would best describe it. Same thing as sort of here. If you're going to draw an actual trend line, of course, this is assuming that the price is scaled correctly. I'm not going to really get into that right here just now, but if I was going to draw a trend line, ironically enough, that's actually how I would draw this. I wouldn't really go off of market structure here because it's just too steep. Right, this trend line now loses relevance. And actually, this is kind of a good example, though, where you can see what once was resistance, actually, we lose the trend line, it actually becomes support. This is also a really good example, too, of, is this a bull? Okay, well, fine, hunt market structure. On the other side of the trend line, you notice, yes, we did have a rally here, but no structure. And so as a result, the market just never does W and it just keeps crapping out. And finally, the W comes in there. But that's not what you're asking about. You're asking about crude. Was it this peak? What time frame is that? Where the heck is that? Did I put that time frame on here? Doesn't look like it. Oh yeah, maybe it's. I could have sworn this is the crude market. Actually, I probably have it in here, right? Yeah, right here. Nope, right here. This one. Let's see what we got here. All right, so this is survey says, is it gold? Is it crude? It is gold. Thank you. Owen corrected me there. And it's back in 2012. All right, so that's that peak there. Yeah, I think this is tricky here, right? I can understand that the public generally is going to want to draw that trend line. But the problem is that this high is higher than that high. So that's not technically correct. What should end up happening is you actually draw your trend line off of those peaks like that, which creates a very, very flat line. Now, a lot of people in the public are going to be seeing this, right? And they're going to be like, well, what are you talking about? This actually is going to become a self-fulfilling prophecy that so many people in the public are seeing this that it ends up actually getting respected. So if anything, really good example here, though, very dangerous just to take that trend line tag trade like, oh, yeah, I shorted that. And then, oh, crap, I got stopped out. And okay, well, maybe I'll reshort it. And then, okay, I'm feeling pretty good. Then, oh, crap, now we're back into the soup. I would actually argue that your trade comes in on the structural fail, which would be sort of in here. And then if you want to draw reload zones, to get in on the trade, then okay, at the trend line with reload zones, okay, that makes sense. Good old mountain man kind of idea. Try not to take the trade just blindly off of the trend line tag. But honestly, I look at this, I actually think that this is the predominant trend line here. And this is Brian, right? Yes, I can understand that this was validated with this action and this failure here, but I would actually argue that this is the predominant resistance up here. And I wouldn't be surprised if gold actually has to work its way up here. That's a tough one. Me personally, I don't like this trend line. Because this high is higher than that high. But I could understand if you went to say like a monthly chart, this action might disappear. So off the monthly chart, nope, same thing. I don't like this as a trend line. I really don't. I prefer this as the trend line. And to me, I think that this market needs to come back up top here. I really do. So I'm going to leave it at that. I'm just going to simply say, this is my career. I have noticed that that if I wanted to really identify what the market structure is trend line wise, I would actually be going off of this as sort of the big M here. That was confirmed. And actually what I wanted to say earlier, and this should be an interesting experiment. I do understand that there are some sort of skepticism about this. I completely understand. But what I wanted to show you, let's see if I can. If I go channel, and let's go there. Yeah. So I really like how, notice how this was respected here, was respected here. Yes, I understand that this, really you could argue, whoops, before this point, we were looking at something like that. This is an interesting example that I use because it could be open to various different forms of interpretation. But me personally, I think I would be, I think that the trend channel specifically is that. And it'd be interesting to see how this plays out over time. I suppose you could do out of there. Was that respected? It's a tough one. Could be. It's a tough one. But I'm just going to say, like, textbook wise, what I would want to see is I want to see the market structure. And I think the fast moving average, fast trend line was actually this there. Like so. Once that was sort of breached and then we take out this high, right? Actually, we didn't take that high out. I guess you could say that there was another one that was put in here, right? There to there. And on the break of this, and the fact that if we went to new highs there and took that out, then you have to redraw it up there. And actually, it's kind of good that we have this. This is the kind of stuff that you're going to run into. And then, of course, like I said earlier, what we'd want to do ideally in this scenario is actually draw your 45-degree angle. Because we just don't have that clean market structure. The only problem with this is you saw how the scale changed. Is this still a 45-degree angle? But on balance, I would say that the 45-degree angle is your primary trend. And this actually ended sort of through this action here. So I don't really like this trend. I don't think that that's, yes, it acted as resistance. I think probably mostly because it was like self-fulfilling prophecy. So many in the public saw that. But I'd actually argue that this is your primary trend line now. And it'd be interesting too if we did a reload zone. Back up top here. Because now we're painting a really cool trade location. So I think that we can do something along those lines. Now this becomes a really powerful trade location right into there. So that's the way I'm going to answer this. If you want to draw these trend channels and these trend lines off of these peaks, just understand that if I see your chart, I'm going to be like, I don't know about that. I would actually prefer that you draw that 45-degree angle and just simply use that as your primary trend line there. But I would make the argument that this is the predominant trend line right now. And notice how reload zone lines up really nicely with that. So now I've got a very interesting trade location right up here. That to me looks like very compelling. So that's basically how I'm going to leave that question. I do understand that you might look at that and go, well, isn't that an M? But the fact that that high was higher than this means that no, that technically is not correct. That's a cheeky one, and if anything, it's good that I did put that in there. This is sometimes where that nuance of trading shows up. It's a tough one. I'm not going to sugarcoat it, but that's my official answer. Is that I like to follow the market structure. Now, if I was looking for short-term trend lines, I really like this trend line. I think that was the predominant trend line. Again, off of that market structure. All right, good question. Put me through my paces. Can you elaborate more on discerning whether a pivot point is worth being assigned a horizontal support and resistance level? How exactly do you tell? Every pivot along price action or just larger range key pivots? I'm going to simply say that if what you want to do is you want to start out at your absolute highest time frame, right? And really, as you can see here, all I've done is I've just gone, okay, where did the market top? Where did the market bottom? And I've just, on this kind of situation, right, you had a really big rally and then all of a sudden price came off. So something big happened there, right? And then we rallied up and again, we made a peak and then we started backing off. So, the very first thing that we want to do, like going back way back when, wherever you start this, is just simply go on your chart. And really, we could do another one right here, right? Obviously, that's a pretty important level. So let's just make sure that this is all the same. That's number 2, and that's number 2, and that's orange. Orange, number 2. 2. All right. So we could very easily make an argument that that's a pivot, right? And really, we could go back over time. This is the weekly price chart. I'm just going to simply say, where did the market stop? Where did the market start, right? In fact, here we should make sure that these are all synced. I think I have this one already synced, yeah. So, all of these, right? Where did the market stop a rally? Well, clearly it stopped the rally right there. Right? So that's obviously a key level. And the good part about this magnet function is it'll just sort of snap it right to that high. So it makes drawing these really easy. Obviously, that's a pretty important pivot, right? Right there. So, and I really, through all of this looks like an important weekly pivot. Let's do that one there. And really, if you want to do, that's an important weekly pivot. And then we come down here. That's an important weekly pivot. And really, this is a weekly chart. That's an important pivot. We could go through the whole thing here. Just where did the market stop going up? Where did the market start going down? And vice versa. Something along those lines. You can see the levels starting to develop. Could you do one off of here? Sure, why not? Could you do one off of here? Sure, why not? Could we do one off of here? Sure, why not? Really, you could do them all along here. Then once your weekly chart is tricked out, right, if you go down to the daily basis, you might find like we didn't do one off of here. That's probably going to be a daily one, right? And then that one there, we could probably do a daily pivot off of there. So really, it's just really a question of like think M's and W's, that market structure kind of idea. Turning this on will sink to rest. Okay, well, thank you. Oh, really? that's cool. Didn't know that. That's this one here. So it'll automatically put them all on. Oh, you guys are so smart. So Owen's already saving us time. I knew there was a reason to let you in on this class, Owen. You are owning this. And we can just go through all of these. Might go off of there. Off of there. Right? Really, you could do one off of there. And really, you know, the interesting thing with horizontal support and resistance is, yeah, you can't really do too much. The only issue here is, you know, keep in mind, this is a weekly chart. So if we go to the daily chart now and look at all those levels, what you should see is that now off of the lower time frames, and if we go back there, right? So these are all these levels that we just put on here. Right. So there's what the daily chart looks like off of those levels. Right? They're there. And could we now, and you know, off of the dailies, right? You can see that as, and I don't know, maybe actually this isn't far enough back. Oh, you know, actually, this is one sort of shortfalling with TradingView is that they only, you know, if you go down to lower time frames, you can't go that far back in time. So it looks like it cuts it off after about 4 years. So just be cognizant of that. But on this daily chart, you notice that this weekly level here, obviously important. Could you draw a daily pivot off of that level there? Totally. I can't remember what color I used for daily, but I think it was teal. Where did I put the dailies on here? Yeah, let's see what this is. Teal and 2 and 2, right? So you can see on the dailies, there's the weekly pivot. Could I have gone in here now and drawn the dailies pivots there, and maybe one off of the top of there, one off of the top of there, that they just don't show on the weekly charts? Absolutely. Right? Perfectly fine. You can see I did one there. Could have probably done one here. Probably that would be like a good 4-hour pivot. Could have done one off of here. Notice that this high here corresponds perfectly with that low there. No accident, right? Really good example of basically the market ran up. It broke out from this, came back, checked the original breakout. This obviously was an important level there, right? All right, so I hope that helps answer the question. Really, there's no wrong way. What I would prefer, whoever asked this question, is, okay, I've drawn them like this. What do you think, right? Versus, can you just go over again and just do another tutorial? I would prefer that, you know, you say, can you elaborate more? I would prefer that you actually include a chart, trick it all out, and ask, well, is this valid? Is that valid? And I'd probably go, yeah, that looks good. Or nope, maybe we need to correct that. Okay, number 5, when locking price bar ratio, implying 45-degree Gann study. Okay, so you know, at this point, I don't want to get too much into Gann himself. If anything, what I would prefer, yes, I introduced you to this Gann square and creating the 45-degree angle study. As I sort of showed you there originally, at this point, actually, oops, what's going on here? That's weird. It's automatically locked into place. Anyway. At this point, I think I would prefer you just to, yeah, I mean, you can do the Gann square. And then if you want to create the 45-degree angle tool and use it that way, totally fine. But I think I'd actually prefer you just to stick with the angle tool here. If you're going to draw your 45-degree angles and just do this where it actually says 45 degrees right on your price chart. It's not a bad idea. You want to practice both. I mean, we're going to spend 2 full modules on Gann, just drive you absolutely crazy. So we'll have lots and lots of time to talk about GAN. Can the price bar be set to anything and 45-degree angle is still work or must be a round number? Don't really see the necessity of locking price bar. And keep in mind too, this is actually more a conversation of how do I use TradingView. And TradingView constantly is changing how they build these tools. But watch this 45-degree angle on my screen. See when I zoom out like that, you see how the 45-degree angle now is pretty far away from that price action. But when I zoom in, you'll notice that that 45-degree angle now is below this price action. Well, what the heck happened there? Well, the answer is that as I zoom in and out and more data points are being added to the chart, that the computer program itself is changing the scale of the chart to make sure that everything fits on the screen. And unfortunately, with regard to GAN, and really more importantly, 45-degree angle, 1 unit of price, 1 unit of time, it's actually in your best interest to go into the settings oh, look at this. They've even changed this now too. Jesus, every time I come on here, they change the goddamn thing. You can see that just on this setting right here, you can see it's 3.949638, blah, 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 blah. Drive you crazy, right? Now I might have to go and actually school myself up on how they've changed this now. Because this is even different from when I just did the tutorial videos for you guys. But we have a simple rule, and it's actually kind of cool. I think I included it in here, but I'm not positive. When we're trying to figure out how to scale your charts, but like I said, this is really more a conversation for GAN. But really the default way to make sure that you have sort of the generally correct yeah, I don't think I even went into it too much here, did I? Generally, the correct 45-degree angle. Later on in this program, we will do point and figure charting, but I don't think I have that up for you just here. Let me pull that up separately. Okay. Where am I going to find this? Can I do that there? No. Can I do that here? Go right there. Stock.com. That doesn't work. Not a symbol. I want. Caramba, drive me nuts. The point and figure charting people, because keep in mind this is all about the same time as GAN was doing his thing. They use this reference guide for what's best to set your box size, which we'll do in detail when we do that module. But if you want sort of a reference for how to set scaling, this is the default reference for point and figure charting. So in essence, this asset in particular, what are you looking at? Gold? I'm not quite sure what asset you're looking at. I guess you don't give a specific reference. But the best thing to do is sort of figure out what the price of your asset is, and then just set the scale to whatever this is. So, gold chart we're working on is $1,300. So $1,300. I might be inclined to stick with the $5 5-to-1 ratio because it's so close to 1,000. You can see there's a big jump from $5 a point up to $50 a point. And really, these are sort of apples and oranges when it comes to pricing. But if we just do simple $5, then our 45-degree angle looks something like this, right? And then when you're gonna, and actually that's kind of cool because you can see how the market respected that, right? And then what you're gonna have to do to make sure that this doesn't shift is you have to go in and actually it says lock price to bar ratio. So now what happens is when I scale in and out, you notice that 45-degree angle doesn't move. So hopefully that helps you. It's a good question. You're going to run into it a lot over this course of this level 2 program is how do you scale your charts to actually draw the 45-degree angle correctly. And hopefully that helps you what I just walked you through there. Okay, number 6. For the 3 tags of the trend line, LJ, can the 3 tags include the original high or lows that created the trend? Basically, one more tag and then a break. Yeah, basically. Think of market structure as 2 of those tags, and then you want that third one to sort of validate that it's rocking and rolling. If the trend line is broken and market structure comes in on the other side, then you know you're good to go. So, nice simple answer. Yeah, did I not? And you're going to see this repeatedly in the course material. So there it is again. Have fun with that. And if everybody wants to just cut and paste that into your notes, we will be making reference to this quite a bit through this course. All right, so number 6 was a fairly easy one. Thank you for letting me off the hook there. Number 7, can you elaborate more on identifying pivot high and pivot lows and drawing horizontal? Didn't we just do this? Can you elaborate more on whether a pivot point is where the sign or horizontal? Okay. Can you elaborate more on identifying pivot high and pivot lows for drawing high-low trend lines? Elaborate more. I don't really like this line of questioning. I would rather you say, Brian, I've drawn some high-low trend lines. Are these correct? When you say, can you elaborate more? We could be here for the next 4 or 5 hours. So I'm not quite sure if we want to go with that. Seeing in multiple places where pivot high and low pivot lows could be connected by a trend line. Xilinx. So I would prefer for these sessions that you pull up the chart of Xilinx and you say, can you please tell me where you would place the high-low trend lines? So if we just type this in here, okay, there is the chart. All right, we will go like that, and we will go. Yeah, I mean, when these assets go parabolic like this, you're right, you could do a bunch of high-low trend lines. I mean, I just eyeballing this, I kind of like that low to that high. That sort of jumps out at me, so let's see where that ends us up. Yep. So pivot low. This was it looks like is the lowest low. I suppose we could also maybe even do one off of there, right? Because that's a pivot high. Yeah, really, you could do a whole bunch of them. You know, that's a pivot low, that's a pivot high. Interesting how those are almost parallel. Keep in mind, I'm just totally eyeballing this. We could go off of that pivot low there, that pivot high there. That's an important line. Oops. And you can see how the market came up and respected that quite a bit and took off. Could do one that low there to that high there also. So it's not like there's just going to be one, right? There's probably going to be multiple. the key here is what we just really want to see is swing. And if you want to pull up like a momentum indicator, maybe the hunt for momentum tools giving you key pivots, there's nothing wrong with that. Don't know whether I would use this one, but you might. Let's see what we got here. It's a bit too quick, but let's see what happens. Yeah, well, you can see the market sort of respected that. Now it's actually acting, probably will act as support here. We could do another one off of these levels. The key here is we just want to make sure that you're grabbing the swing low and swing high. Is there a right one versus a wrong one? Not really. I mean, heck, you could just say that was a swing low and this was a swing high. And notice that that also lines up nicely with that level there. And then that was a pretty important level there. So you're right. You could have done a bunch, right? And what's interesting is we could have done some more through here. The more pivoty it is, the better. So like this here, that's definitely a support one. There. Interesting how this played pretty powerfully there and then there. And then we could go this high up to that high. I suppose, I mean, really, I don't see any reason why you couldn't draw this swing low off of this swing high. That painted those resistance levels there. It's just these are trend lines that the public is just probably not going to see. We could go that low off of that high, which in this particular case seems to be painting pretty good support in here. So as you can see, there's a bunch of them. You're absolutely right. You could do a bunch of high-low trend lines, no doubt about it. The key, I think, is just to try and zoom in on, if you're going to draw one of these lines, just try and zoom in and just make sure that you are actually grabbing the lowest low or the highest high. Like I wouldn't draw this pivot line or any of these, like say this one, for example. I wouldn't draw this off of, say, that to do a high-low trend line. I would want to hunt for that key pivot low. And really, this is a case where you might go, well, what's this low here? 581. Well, what's this low here? 613. So, say, well, Brian, didn't you say go off of the lowest low? Okay. And then, could you draw your pivot line off of that highest high? Sure. Which also happens to correspond with that high, right? And I actually think pivot low, pivot high, that actually painted that objective there. But then also notice too, right? This is the really cool thing about these, is this trend line actually was super important for quite some time. So this was off of this low to this high. Then notice, right, look at this tag right here. Doink. And then the market came off. Why did the market fail there? Right, and then notice now what once was resistance now becomes support. Support. So, I don't know whether you can do this on your own. I think probably what you should do is do a few examples and just simply ask me, well, Brian, is this correct? And really the key, I think, as I sort of pointed out here, is what we really want to do is we just want to ask, what are key pivot high? That's a key pivot high. And this is a key pivot low. right? Then when you draw this, obviously in the short term, it's not that valuable, but I mean, you tell me, was this a valuable reference when the market came down into this level? I think so. And then again. I also think too, as Owen says here, too arbitrary for me. In a weird sort of way, a lot of sort of technical analysis is more of an art form than a science. And really, what I'd love to see, do we ever take a trade off of just any one reason alone? No. So, what I'd love to see is if you had drawn this trend line, you were thinking, it looks like we're going to run into resistance as we're coming up to here. What are my internals suggesting? Do we have signs of divergence that are developing on this push up into here? So I've got resistance now level. Do I have divergence? And then, all right, here comes big railroad tracks or an M top. All right, I can short that for the move back down. So, again, as I sort of said earlier, somebody had asked, how do you use trend lines? I think here's a really good example of trade location. Did I have divergence developing as we were coming into here? Again, do I have divergence developing as we come into here? And, here's probably a good example where, and really, I don't know if this is totally accurate or not. Right, there's that low. Where did I draw this off of? I don't know where the next point is. Silly Billy. Oh, I guess maybe way over there, right? I might even like to go off of that level. So interesting how this actually lines up with market structure. Again, huge value there. And what a coincidence, there. So this high to low trend line over time actually is proved to be pretty valuable information. So as we're getting into these areas, do I have divergence, lower time frames? Do I have structure to short? Again, do I have divergence? Do I have structure to short? As we're coming into here, we blasted through this. Was there divergence here? My hunch is probably not. Then coming down into here, especially on this move here, was there divergence that developed here to help me set up a long? Then again here, right? So think of these trend lines as your location. And then if you want to sprinkle in an indicator for signs of divergence, well, then you got potential trade. Then really all you're looking for is just some sort of structure and price to get you in, maybe drill down to like an hourly, something like that. So I hope that helps. Again, let's try and keep these questions nice and specific versus can you elaborate? Okay, number 8. What does it mean to confirm off market structure? Well, you remember back in level 1, and I don't know whether this is pertaining to trend lines, but you remember back in level 1, we had said that really, how do you define an uptrend? Well, an uptrend is market structure confirms the signal there, and now that is your uptrend. And this now is a valid trend line going forward. Right? Maybe you're like, well, Brian, I want that to be right off of those lows. Okay, fine. Right? There is now your uptrend. And what I mean confirm off of market structure is this point right here confirms that this is now the active trend line. So in the module, remember I had said earlier, I really like this trend line in the gold market. Right? So this trend line, boobity boo, it was confirmed right there. Now this becomes the active trend line for me. And notice, really, market could have broken out here, but there was no structure on the other side. Market could have broken out here, no structure on the other side. Market could have broken out here. No structure. Oh, hello. Here comes some structure. So confirming that this is broken. And now with this structure, we can actually start drawing uptrend lines. So I hope that helps. In the video, you said point A's market structure did not confirm. See picture below. However, point B's market structure confirmed. So that's probably this stuff. As I sort of said, yeah, technically down the road, because this low is so extreme, we did confirm it here, but this is pretty sloppy. And so as a result, not overly impressed with using this as a trend line going forward. Ironically enough, I actually think the valid trend line, as I said before, up, down, up, breakdown through here actually activates this trend line B. And I still think that this is the active trend line, the trend in gold prices. Market structure not confirmed. Is this when price goes below the low? Yes, right? Just as I sort of showed you here. What does an active trend line actually look like that's been validated? This is the point at which that market structure confirms, right there, which is very counterintuitive to new people to trading. They're looking for signals that this is trending higher down here. But I've seen many, many times in my career, market will come up and then the market will break down. And you're like, well, I thought this was an active trend line, but it isn't. But that now is the new active trend line there. All right, I hope that helps. A confirmed trend line means that the market structure used for the trend line is confirmed. So the M or W used actually confirms. So in your example, you are correct. When the price goes below the low. Yep. All right. Thank you, Zach. Awesome. Okay, gonna take a sip of beverage. Okay, when we're looking for a trend line to be confirmed off market structure, do we need a candle close above midpoint of market structure, or wicks and tails enough? Yeah, this is getting into sort of how much confidence do you have in the trade pattern. I would make the argument, and this is just Brian, gnarly old trader. I believe that all structure, oops, actually that's not what I want. All price action is relevant. So in this particular case, I actually think that this lowest low of the tail is most important. I do know, and keep in mind, institutions, they primarily just work off of line charts. So if you want to look at the way the institutions are going to look at the market, just turn off the candles and just turn it to a line chart. And then the M's and W's, they jump out at you very clearly. But me personally, I'm a wicks and tails kind of guy. So, for instance, this big top here, we could say that, these candle body close lows are the level. I don't know whether we have a close on this candle below those levels. It could be. But me personally, I'm a big fan of like all the price action is relevant. All right, so own population says, but like in W's here, we don't need candle body close to surpass midpoint. But Grimm said, even if we use all price action, confirmation comes by body close above midpoint in W and M. I don't necessarily subscribe to that particular newsletter. What you're probably going to find is that most times the M's or W's will see confirmation from both candle bodies and wicks and tails. So, it's very difficult for you to have one without the other. I'm going to see if I can find an example. So here's probably a good example. So, if we had changed this to a line chart, you'll see that we went up, we came down, we went up, and we broke down. So technically, if we went off of just clotheslines itself, watch what happens when I change this to a line chart. Theoretically, our bearish market structure, according to clotheslines, confirmed there. But as you can see, the market quickly went up and smashed these highs here. Me personally, I wouldn't say that this was actually bearish market structure and this thing has failed yet. I would say, well, I think that the failure will come in on this move down here. You see the difference, Home? So I think probably, and if you ask this question, I think you want to default to wicks and tails, all of the price action. If you, and then, just move back and forth between clotheslines. I think he's asking about the confirming candle itself, non-midpoint of structure. Right. So like, this example here, this would be our confirming candle right here, right? This thing has M'd out. Boom. Closed below that level there. But you'll notice that this tail did not go through these tail lows here. So I wouldn't necessarily be ready to call this, put a fork in it, the M's in, it's done. And as you can see, they rallied it right back up and they busted these highs. Then the market comes down, boom, and simultaneously on this candle, the tails are taken out. And also, too, the candle body lows are taken out on this candle. So both your wicks and tails and your clotheslines are confirmed on this candle here. Whereas this candle here, yes, it did give you a clothesline M, but it never gave you the wick and tail M. Well, like you said, yeah, so do you need candle close to be more sure? Well, in this particular case, yeah, you'd go, well, that is an M, right? The candle closes there, but then we went and got busted out. So, no, right? I would want to see, again, and this is me, I want to see wicks and tails, the whole pattern busted. Now, one thing you can do, and I notice Thomas likes to do this, is, let the M come in, and it's a big one off of wicks and tails. And then if you're going to actually get short, target that level of the clothesline to actually put your short on. Does that make sense? But to actually have this M confirmed, I got to see wicks and tails taken out. That's me, right? But I'm an old gnarly trader dude. Okay. Okay, so was that this one here or this one here? Was that 9 when we were looking at channel line and confirming? Yeah, okay, so that was number 9. All right. Okay, what do you have here? A, B. Is that gold chart? Yeah. See, I don't know. This high here, actually, I do like if this high was higher than this high, then I can live with that. But I don't think this high was higher than that high. So I don't, if this high is lower than this high, then no, that's not right to me. I would say that you would draw a trend line off of here to here, and that is validated here. But the trend line is actually more horizontal. It's much flatter. And the worst thing is A to B. If you actually draw a trend line off of A to B here, this is actually upward sloping. Okay, number 10. In the video, why did you not redraw the trend line to point A? See below. Is it because the previous point is still lower? A. Yeah. So you could do, if price does get up through the middle here, you could do one off of here to here as another trend line. Really, I would make the argument that this is potential. And really, we need to see the market get up above this level to actually validate and confirm this trend line is active. I would say this is nothing more than potential right now. Interestingly enough, though, I mean, if we M'd out here and lost it, could you use that potential trend line as sort of a trade location tool? Sure. But again, you've drawn this line here. I'm a little suspicious about this. I don't know about that trend line. And that's kind of why I put that on there. I don't really like that as a trend line. Yeah, and when I redid this video and stuff, I did see that price did respect it, but I still think that this is the primary trend line here. Interesting case that I used there, and very open for debate. All right, so is that the same one? Yes, sort of. Why did you not draw the trend line? What I see below A? Again, I would be inclined, if I was going to draw an uptrend line, if this low is lower than this low, then this is the potential market structure signal here. And really, ironically enough, I think you can actually just draw horizontal support and resistance lines, and this basically just defines a trading range. Top of the range, bottom of the range. Be really cool if you did a horizontal support and resistance level, and we could just bang back and forth between the horizontal support and resistance lines. Okay, number 11. I plotted some horizontal support and resistance on Wax USD. However, it seems so busy, does not seem to be telling me anything. Okay, that's what you got here. All right. Don't know how far back these go, but I don't know. Look at this rally right into these levels here. Right. I think this is a really interesting area here. And then on this move here, I mean, I don't know how far back this orange line goes, but look how the market stopped right on that level there. This is a daily. I think it would probably be really cool if you would drill down to sort of like a hourly chart after you've drawn these, just to see these air pockets really big. I think there's an air pocket sort of right in here. So, market comes down into these levels, puts in this bottom, sort of floundering around. It accepts above this level. And notice it, and I guess in this particular case, it like closed here and then it opened up in here, ran into these levels here, ran into a lot of selling, started to fail, and then notice the air pocket in here. So interesting how, we sort of lose this level and boom, right down back into these levels. And that's really the best way to use horizontal support and resistance, is you really want to hunt those air pockets. is there any area on my chart where I can see the market can move egregiously just because there isn't any horizontal support and resistance? I also would have made the argument, and we'll do this later on about price gaps, right? We can actually do price gap levels as well. So, along with previous horizontal support and resistance, and I don't know how far back this goes. You've got this big old gap right here. So we could draw, your horizontal support and resistance levels and also gap levels, and it should make complete sense why the market ran up into this level, into the gap, and then just was rejected. I think also too, why did the market find support here? Again, gapping action. If we lose this level, look left, the next support, you can see this candle, there's just not much support in here, and then air pocket. So if we lose this gap level here, and it looks to me like 30 SMA is probably going to line up with this horizontal support level. If we lose that level, next stop, boom, is down into this area here. So I hope that helps. Actually, I think that there's actually a lot of really good usable information here. I think it makes complete sense why the market stalled through here given this higher time frame and then cluster concept. And then also too, this looks like it's a higher time frame level. I mean, look how the market ran right up into that level and then was rejected. And then you look at this and you're like, wow, this is all over the place. But interesting how the candle, I don't know where this candle finished. If it opened up here, rallied up, looks like it tried to accept above this level. And then, I mean, this doesn't really make any sense. Did this market open down here and then closed up here? Something doesn't look right about this. But and then did this candle open up here? I mean, this, and also too, I might also argue, I mean, I don't know what this wax thing looks like. But when you get down to smaller and smaller assets that are more speculative, more venture capital, these kind of concepts of, horizontal support and resistance. Remember, horizontal support and resistance in the video, I talked to you about how institutional players use this for setting Forex rates. So when we get into illiquid shitcoins and the volatility is just all over the place, this is going to get messy. Right? It might be a little bit difficult to do this. Just a FYI there. Wax USD. All right, let's see what we got here. All right, so if I was, first off, your weekly levels. Yeah, this chart actually looks a little bit better than what you've got here. Something doesn't look right about these levels. The way this is jumping. Oh, where the hell did it go? Down here. Something doesn't look right about the way that this is painted. What's the date on this? May. So this is pretty recent, eh? So when I look at this, what I see is, oh, this is weekly. All right, let's go down to daily. Yeah, I mean, you know what we call this, right? We call this like Chop Vegas. So, but just on balance, nice and simple, right? Key level, key level, key level, key level, key level. Very quickly. Hopefully you guys can sort of get the gist of how I do this. This is all right. So air pocket. There's also a big gap. You'll learn about gaps here shortly. So we should expect this to be filled in anyway. I like that yellow. All right, so there and there. So now we've got kilos, right? We could even do another kilo off of here. Excuse me. And off of here. So you've got gaps now and horizontal support and resistance. So if we lose this level in here, this is all open air down into these levels here. So I could very easily see the market, I suppose you could argue, horizontal support and resistance, that low is important. That low, suppose you could also do this high. This looks very splotchy, but nonetheless, low, high, high, gapping level. All right, so we could do a yellow in here. Another key low. So you can definitely see the cluster that's developing through here. And then if we lose this level, this is all open air. And my hunch is if we lose this level, you could easily see us come right down into this level. And so the question really here at this point is, well, why did the market stop? When it was coming down, why did the market stop? Especially like right here, why did the market stop in this area? I might argue, there's kind of a kilo there, kilo there. I suppose you could argue that that's a kilo, right? So the market comes down into this sort of area of previous horizontal support and stops, rally back up, resistance, gapping level, right? You'll learn more about gaps in a couple weeks. Now this is horizontal support and resistance. Market comes down, starts to find serious support in here, this low, that low there. Rallies back up, comes back down, finds support, goes up. So again, hopefully you can actually start to see the clusters developing here. But I would say, I think it's really important to say here, this looks like an illiquid name, very splotchy, probably a heck of a lot of manipulation, pumps and dumps, fat fingers. I don't even know who this is. And are they actually trading it versus US dollar, or is this just a quote that they're creating based on, say, Wax Bitcoin, right? And they just have a function, kind of like how TradingView creates charts. I don't know what the answer to that is. But as you deal with more and more speculative issues and you see lots of price gaps and you see these insane wicks and tails, obviously horizontal support and resistance can be a little bit more difficult to have confidence in, if you will. Probably an easier way for you to do horizontal support and resistance off of something that is as choppy as this is simply change it to a line chart. Right? And then you can really quickly, easily see where the clothesline levels are. Right, so maybe we'll go like purple. So now really easy to see where the clothesline levels are. Interesting out into this level right here, clothesline, clothesline, clothesline. Look how clothesline, 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 accepted above. And now this becomes support, right? Support, support, resistance. Now support. So you can see how powerful that level is there. So if you want to try and, yeah, it could be, Alicia. All right, if you want to try and reduce the noise off of these smaller cap issues, right, I think you can make the argument there, there, there. Right now we're starting to paint a picture of support based off of the clothesline levels. Right there, clearly there's a lot of support in this area. Now we change that back to a candle chart, and what do we see here? All right, well, see there's a bit of a gap there. Interesting, look at these rally peaks right into there. This thing sprung up, and where did it come back to? Right to there. You can see the resistance right now. You can see it as support. So clearly this is an important area. So I hope that helps you. I might be a little bit leery about these, illiquid names that have these insano wicks and tails, and having confidence. Because keep in mind, the more speculative, the more venture cap you go, the more likely of this kind of price action, where the order book is so thin, all it takes is somebody to sneeze and they could launch price higher. Horizontal support and resistance works absolutely much better in liquid, thick, uh, institutional participation, i.e., stock indexes, futures contracts, forex, than off of highly speculative names. Now, having said that, can you remember we never want to take a trade off of any one reason? So, can you see that if I draw reload zones off of this range, now when I start thinking about trade location after drawing all that horizontal support and resistance, now we can start to see confluence where I've got all of these levels. There's even this juicy gap right here. And there is the reload zone. Do you see how that lines up? Whoever asked this question. And that's really what I need for you to take away from this module is overlaying studies and seeing studies agree on location. I don't know. I don't know if you want to. I don't know whether Zach even has the answer. The only person who really can probably answer that is Brian. Do you get to answer that? Right? We got 15 minutes left here. Zach, it's going to hit the buzzer. Class is over. Goodbye. So we better keep moving forward here, right? All right. I spent a lot of time talking on that. Number 12. In TradingView, how do you square up the charts? Okay, well, we talked about that earlier, so that's good. Without the same ratio being applied to the other charts assets. Yeah. I would suggest you have to use different charts, right? So, let's say, holy Jesus, crude's just falling out of bed here. Where was that one that we did? I guess I got rid of the chart. Anyway, if I had squared up this chart, my suggestion is to, if you're going to do a new chart, if I square up this chart and then I go and type in a different symbol, it will stay on that scaling method. You're going to have to go and load up a new chart. There's no way around it that I know of on TradingView yet. Kind of a pain in the butt. I squared up BTC, but this also, yeah, you're right. It does. It sucks. I'm not going to sugarcoat it. And so, my simple recommendation is to save that chart, then put it away and load a new chart if you're going to do something else and you wanted to save that previous chart. I'll tell you, the TradingViews, it's been a fight dealing with Mr. Gann and TradingView. Number 13, would you rather use 45-degree Gann for any trend line that has lower than 45-degree angle? Or rather not use? No, I don't necessarily think the 45-degree angle is the most, is sort of the tell whether a trend line is valid or not. What you will see, kind of like what we showed you earlier, is sometimes, like here, for example, you could technically do a market structure signal from that high to that high, right? And if I sort of zoom in on my charts, it will become more usable. So, technically that is valid. It's just a question of when does it become invalidated, right? And interestingly enough, it looks to me like this trend line was sort of lost through here. And then as a result, following that event, this trend line now becomes moot, right? And what I might suggest, kind of like what we showed you with that gold chart, is you do the next one. So this market structure was validated here. So now we're operating off of this trend line, not this trend line anymore. And really, what should end up happening on any kind of market is if you keep following the market structure signals, what should end up happening is the trend lines get flatter and flatter as we go through the downtrending market and flatter to the point where they actually start turning back up, right? And you actually get a really good visual of the trend turn in the market. Can you see how that's sort of painting a turn in the market, right? So, I mean, it's a little difficult off of this to see this. But what ends up happening is you get this sort of saucer image. Market was downtrending and now is turning into uptrending, right? Yeah, I know. Oh, geez, you're going to be interesting character to work with, I can see. So I'm not going to necessarily say you have to use the 45-degree angle. What I'm just going to simply say is if you want to draw the 45-degree angle on top, if you don't have really clean market structure, it will help. And really all I want you to have these tools in your tool belt. And I want you to be able to draw these angles. And if you see a market that's, absolutely crazy ass steep, you should look at this and go, well, is this really going to be usable that much over time? It is usable as we're coming down here, but you can see that once we sort of left it here, this isn't really that usable anymore. And if I do something like a 45-degree angle, does this sort of help me see trend a little bit better? Something like that. And you can see, well, 45-degree angle really helped me a lot here. And really, on this just simple study, basically once this was lost, all right, now can we find structure? All right, we're good to go. So I just want you to have this in your tool belt and just understand the context of sort of its application. And then just get to work and throw them on your charts. Okay, well, this structure here, that's awfully steep. Is that really going to be a sustainable trend line over time? And literally within a month or so, this was lost and this trend line isn't usable anymore. Well, could it have been usable through this? Sure. Right. Once we broken it and established structure on the other side, then you know that this thing is totally done. Okay, number 14. How are trendline and library setups drawn correctly? Why was selected second high as in picture and not second higher second high? Is this? Basically wanted to connect the dots. One, I don't know why not this as second high. It's higher than the one to the right. Could be. You wanted to go off of this, and I think that paints a break here. So I think this trend line was actually put to bed on this structural breakout here. So the market rallies up. Okay, so where are we going to draw a trend line now? Because this trend line's already over. I think I think what I did was I drew a trend line off of that, and this little W down here was sort of the trade signal following that event. Totally possible. And then, the market obviously rallied up into these levels. So if I just go back and I say, okay, well, where's the previous highs? Can I play connect the dots because this level was taken out? So now we have a big M. I suppose you could have drawn it off of that one, but I don't mind this. There to there to there, whatever the highest high is here. That trend line become validated here. And then, 1, 2, 3. Can I get some sort of structural signal on the other side of that trend line? And that came in over here. So on balance, I don't mean to be rude, but you're kind of nitpicky a little bit here, and you're missing the bigger picture of what this message is trying to say. Right? One, two, three, broken. All right, give me some sort of structure on the other side of this trend line. And what I think is super important here too is you're getting validation of the trend line being broken with volume, right? Volume speaks volumes. Obviously, there's something really big going on here with volume. On the other side of the trend line, okay, how do I get long? Where is my W to get long? And that's basically the breakout of here. I'm going to risk this W now, and looking for at least 2 to 1. So on balance, this looks perfectly valid. What I would suggest is, I think you're being a little bit too, I don't know what the word is. Nitpicky isn't quite the word I'm looking for. I need for you to see sort of the forest through the trees here. Um, one, two, three, broken. Where's the structure? And I've got indicator confirmation, in this case, volume, validating this W on the other side of the trend line. That's the key here. Okay, and let's see. And that was the first one, and the second one, same sort of logic, probably. All right, so we've got 1, 2, 3, breakout, volumes coming in. Can I get any kind of structure on the other side of the trend line? I mean, you could have gone 1, didn't really line up. 2, 3, man. If you'd done a trend line off of here, you'd ask, okay, where is the first structural signal on the other side of this trend line? I think it's going to be the same W. And really what I want to see is maybe less of my examples, and let's see you go out and find some examples. Brian, does this look correct? So let's see. Did you find one? Is this one of yours? I would draw a trend line like this. Okay, 1, 2. Yeah, okay, not really LJ setup here. 1, 2, 3. I like this. You got 1, 2, 3, 4. Okay, give me a break of this. We come back to this trend line. Give me a break of this. Okay, finally you got a break of this. I suppose you could have maybe justified taking a long off of that. And do you have indicator confirmation here? 1, 2, 3. Yeah, I kind of like. I like the yellow one. I mean, you could draw this purple one. I don't have a problem with that. What I really want to see is, 1, 2, 3, break this trend line. Clearly, we lost it. So, what I really want you to see out of this is there was no break of the trend line, and even worse, we put in a little M on the fail of the trend line, and the market crapped out. Again, same sort of thing. We potentially broke your purple trend line, but do we get any kind of bullish structure on the other side of this? No. And we ended up crapping out. That's what I need for you to see out of this. So maybe let's be a little bit less specific about, is this the exact point? What I want you to see is 1, 2, 3, break the trend line and structure on the other side of the trend line. That's the big message. Number 15, can we use same candle as high, low, and midpoint? I would prefer not. I think that's a little dangerous. Let's see what you got here. Yeah, I don't like using the midpoint and the high candle the same. Not really the biggest fan. I don't mind. Again, you'd have to see the market get up through the top here to use this as a pivot high and pivot low. I think this is a sideways market, right? You could do like high to low. Yeah, I don't know. I think let's see. We use same candle as structure, top and low. Same time. I mean, yeah. I mean, I do like M up, down, up. If we break through here, fail. And of course, on the M, your stop has to be against the high. So here, yes, you did get your signal sell, but you notice that you had to take a hell of a lot of heat. You never did get stopped out up top here, and then it broke. So yeah, I mean, you could use that as the top of the M and then the midpoint of the M. That is still valid. I think actually, interestingly enough, it looks to me like up, down, up, then fail over here. And really, the way I would look at this is I would look at this as a massive sideways channel. And yeah, if you had traded this as the M, and like I said, your signal fires here, your stop has to be up here, and you never did get stopped out. The only problem with that is that this is a huge range. So you're taking quite a bit of risk shorting this, but you have to understand if you are going to trade that, then you got to have your stop way, way up here. Where was this one confirmed? Here A or here B? This, in my opinion, is confirmed here. All right. Would you want for this trend line to be broken before taking the trade? What the hell you got here? Is that this? Sea blue arrow. I do not like this at all. I might keep in mind you're looking at an asset that's calculated by TradingView, so I don't know whether they actually even trade this versus US dollars, whether this is a manufactured asset. So be careful. Like this is the classic hallmark of an illiquid shitcoin kind of market, right? These big ass tails. And so you have to understand, people, that this is kind of like what we saw above with that wax is you're going to get into this kind of stuff, trading these very illiquid venture capital, small cap, highly manipulated markets. This was probably like a rage quit kind of event. I like this W down in here. You've identified nice small risk window. You got a big rally up here. Reload zone, okay, not bad. You could have done a whole bunch of nice horizontal support and resistance off of that low, these lows, that low, that high, which in essence sort of paints a trade location somewhere down in this area. And if that's the case, then really it means you have to risk against these lows here. Don't understand the logic of why you would be interested way up here. That doesn't make any sense to me at all. I don't mind, and later on in this level too, you're going to learn things like price gaps and volume profile. I don't really mind a trade against this area here, but I don't understand the logic of wanting to be a buyer here. That doesn't look right. If anything, You might even draw a fib from that low back up to these highs, and that almost looks like a selling area right in there. So, yeah, not quite sure how to comment on this. Don't really like that, and I wouldn't call this even a trend line. There's nothing here validating trend in my eyes. So I'm not quite sure about that. Sorry, I don't quite understand. Maybe PM me later on and we can talk more about what you're seeing here, but I don't see what you're seeing here. And remember, guys, all of this stuff should work in conjunction, right? We don't ever take a trade just off of one reason. So now with trend lines and trend channels, can we see confluence, right? Don't forget about RLZs, right? You've got it on here. Why were you not laser beam focused on this zone here? And what would be really interesting is if this was the original W, if you had actually drawn a trend line off of those lows, does price actually come up against that trend line through this area here? Then trend lines, horizontal support and resistance, reload zones. All right, this is actually looking like a pretty attractive trade location. Okay, number 17. Would you nibble now this trend line is broken? No, bad trade location. I might even argue that your trend line, I don't know whether I would believe in this. I think we go here to here. This gets really messy though. What is this? This is a daily civic. Think I would be inclined to draw my reload zone off of this peak here down to here, which probably paints a buying zone somewhere in this area here. And this is not a good trade location. So I'm seeing more and more of this. Everybody's watching this video. Just because we're adding a tool to our tool belt, that doesn't mean we forget about things like reload zones. This is not a valid reload zone. As well, too, when we talk about trendline breakouts, and I suppose you could argue 1, 2, 3 broke, give me some sort of market structure signal on the other side. I suppose you could make an argument that's a trade, but little old lady is all about trying to buy against the bottom end of ranges and really is more a question about risk management. So if I'm buying up here and you you could technically little old lady up here if you wanted to. Horrible trade location, but little old lady's all about risk management. So little old lady would just simply say, I'm going to take less than 5% of my portfolio and put it in this good quality name that my broker says is really good. And I'm just not going to do anything. And holy crap, Brian, what do you got me into here? Right? So please understand, little old lady's all about risk management. So, I guess to answer your question in simplest terms, yeah, you could. Where did that go? Right? Yeah, you could little old lady anywhere. It really doesn't matter. The question ultimately here is this a trade setup? And trade setups, I actually think this is getting close to a selling zone, not a buying zone. If you're going to trade the Leanne James LJs, then you have to identify whatever market structure it is you're trading, and you have to trade that market structure. And you could little old lady Leanne James setups, but you better make darn sure that you've got some half decent trade location. This right now, just looking at this, again, I have to reiterate, do not lose your focus on reload zones. They're extremely powerful tools. If you're going to Leanne James this, then you got to identify the W, and if you break the W, you're probably going to have to walk away. Could you little old lady risk management this? That has nothing to do with Leanne James. That is just purely a conversation about risk management. Yeah, I think I'd probably just leave it at that. What did Zach say here? LOL nibbles are based mainly on location. If trendline breaks are used for entry, then waiting for first confirmed structure after the trendline break. And that really is what LJs are, right? Is you see that that trendline break and then you get market structure on the other side. If nibbling on this, one may want to wait for RLZ off the lows. Yeah, I agree with that. Even better for a nibble is draw a fib off weekly and make sure you are in good trade location off higher time frame. Agreed. Yeah. I don't know, I just don't know whether this is half decent trade location. And my hunch is if you did a reload zone off of this range, these tails down in here were probably the ideal trade location for reload zones. Here, you're kind of sort of like middle of the road. And then, if you're trading the setup, then if we break these lows, you want to walk away. And that's not little old lady. That's totally different conversation. That's like Joe six pack kind of trading, right? I'll take the trade. Well, I don't really like the trade location, but you're hell bent on taking this trendline breakout trade. Then identify your risk on whatever the market structure is and act accordingly. 18 EFLF USD is breaking out without W price action. Okay. Can I enter based on this 45-degree line? You can do anything you want. We're going to use the 45-degree line to try and see what the prevailing trend is without actually having structure. I might argue that there is structure here, right? If we went down and then up, you notice that this spike down did not take out these lows. So there probably is a W somewhere down in here, right? Down, up, down, did not take out these lows. You see, and later on in this mod level 2, you'll understand moving averages. As well, too, if you had drawn a reload zone off of this high back to this low, my hunches, that's like 61.8 maybe in there. There's also this structural signal in here. You're coming very late to the party. What I would probably do is, there's a big spike up there. I think I would be inclined to draw my fib off of that high back to this low, which probably paints a reload zone somewhere in here. And I would expect that reload zone to be tested at some point down the road. We often say wicks and tails like to be eaten, so there's a big old tail right here. My hunch is 78.6 is sitting somewhere down in this area here. I'd also say, too, that we have to listen to the message of the market. And I think the message of the market is lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, spike up. Okay. You could have done an A, B, C, D, but this is really, you could argue this is a V bottom, if you will, and it should be tested in earnest at some point down the road. So, maybe you want to hunt things like, trend line breakouts. I don't really like this. I think if anything, maybe there might be a bullish bot setup, right? From here back to here. Did we do 33, but no more than 66? So we're talking trend continuation trade. I think this trade's over. And really, I would be hunting reload zones down in this area. If you want to be conservative, I would even say let the market come down into here, validate that this is not a bear market anymore, because this thing could very easily come right back down and make new lows. And you might even want to just draw a trend line off of this low to this low, and maybe this low to this low to see where maybe support might be. And then also, too, I could see A, B, C, D, This like measured move is actually telling us that the market wants to come down, back down into here, which again would be sort of a serious test of these lows. And then we'll find out whether this is actually even a bull or not. This might just be all bullshit. As well, I see you're looking at a 30-minute chart. What is a higher time frame chart? Always start with that higher time frame chart, and put this sort of trade into context. I don't know what this looks like off a higher time frame, so I can't really comment on whether that's actually a bottom or not. So just to simply ask your question, can I take a trade off of this 45-degree angle? You could, but that's not enough of a reason unto itself to justify your actions. How many reasons do we have to take? I have to take a trade, right? That never changes. Would you wait for hot to touch the 45-degree line before nibbling? Is this a this is a different one. Okay. No, this kind of case, and actually I don't like this because your 45-degree angle should probably be drawn off of this low. Again, you're dealing with really crappy, well, crappy is not the right word, illiquid venture capital, completely subject to manipulation. If anything, I would start with drawing your reload zones, which paints targets down in this area here. I would wait for the pullback to come down into this zone. And I notice there's a big hole in the charts. If I was doing nibbles, I would start with working my bids down against all of these tails and that gap area there. So 45-degree line is wrong. Should draw it off of that low, and not really. The only way I could justify trading this is if the market came down, made 3 higher lows, bought setup, trend continuation, and then structure to help you frame that. This just is not enough. And really, location-wise, Nanny Nibbles shouldn't even be the slightest bit interested in buying here. They would be working bids off the bottom end of the range here. So simple answer, no. Okay, so that's what that chart was there. Nope, couldn't touch it with a 10-foot pole. 20. Hello, Brian. Not sure where to draw C in the following trend channel. Boop to boop to boop. That looks good. Nothing wrong with that. I would do both, right? In fact, I would overlay this one on top of this one. And what you'll probably find is that the midpoint of this really big channel lines up with this top of this channel. No reason why you can't do both. Nice and simple. Jesus, how fucking long does this go? Oh, you got to be kidding me, guys. Oh, Jesus. You have to spend less time on these questions. All right. Would you consider trend channels more powerful than trend lines, or are they sort of the same? Well, technically, trend channel and trend lines are the same. The midpoint of the trend channel is actually really, really powerful. Number 22, is a new trend confirmed by market structure cancel the previous trend confirmed? Cancel is probably not the right word. You can leave them on your charts, but the new trend should sort of take precedence if we break through the old trend. I'm a little worried that you guys are looking and studying these shit coins, and to determine this. I would prefer that we maybe concentrate a little bit more on higher liquidity names to be doing these studies, because you're going to find that the shit coins, the little coins, they get manipulated a lot, right? And if anything, if you want to look at shit coins, you want to look at the little coins, I want to see like daily and weekly price charts move off of these lower time frame charts. So again, for future reference, I'd like to see I'd like to see some examples. So this person here put some examples. Is one more valid than the other? I'd say overlay, nice and simple answer, boobity boo. Would you consider trend channels more? Okay, so is the trend confirmed by market structure? Cancel the previous. Show me some examples, right? And I can go, no, that looks perfectly fine. No, that's, what you'll sometimes see is that old trend lines that are broken, let's say a downtrend, it was resistance, but then the market comes back and it actually uses that downtrend line as support. Okay. Tricking the chart for our weekly, isn't it looking at volume profile to identify the cluster, horizontal support and resistance, and the empty pockets? Yeah, you're going to see a lot of confluence in volume profile and horizontal support and resistance. So yes, the answer is there is a lot of confluence. And again, this is the whole thing. We don't want to really take a trade off of one reason. We would like to see horizontal support and resistance lines up with volume profile levels, which line up with moving averages, which line up with reload zones, i.e. multiple reasons to consider taking a trade. When we trick out a chart, what happens to the price on the right-hand side? Yeah, it's not bad. I mean, basically, you're heading in the right direction. I think it's a good exercise for everybody to trick out these charts. Now, as this person points out, I only position trade. So do I really need to trick out like hourly levels? Probably not. I think I told you in the module when I did the sort of tricking out your charts that, this works really well for like, guys are trading off like 10, 15, minute charts. And day traders. And also remember too, like the Forex guys, there's, day trading. If you want to, for position trading, and I think, this crude oil chart's a really good example. All these are our daily levels. And you can see how we came into this cluster. We found a bit of traction. We lost it. Boom, 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 down into this cluster. And the market's just falling apart here. But it's interesting how we did, off of this low, this low, this low. And the market rallies into this area. And I think you can see off the short term, we ran into some traction. Now, the way I would look at it for position traders is, okay, this is one reason for considering taking a trade. So if you had also drawn on your reload zones, so now you can see that 61.8, there's 78.6, here's some horizontal support and resistance levels. At this point now, we got trade location. So now we want to look at our indicators. Or do we have signs of divergence? And then we want to find price structure, right? Remember, 3 reasons for a trade. So you're heading in a good direction here. There's nothing wrong with that at all. When identifying a pivot point, would you use the bar to the right for the placement if the horizontal line, definition of IPA, equals the bar that made the higher low plus the preceding bar, or does it matter? Well, it should just be the lowest low or the highest high. Simple answer. So the market structure that forms on the other side of the trend line can actually start on the other side of the trend line, cross over and confirm on the other side, in effect straddling the trend line. Yeah, I've seen that, simple answer, yes. The more the structure is on the other side of the trend line, the better. I'm just going to make it that simple. And of course, remember, nothing's guaranteed in this business, but one thing I absolutely don't like is when a W comes in below the trend line and you take it, market rallies to the trend line, maybe even waffles at the trend line, and then craps out. I've seen that happen repeatedly. Ideally, what you really want to see is you want to see the whole W on the other side of the trend line, right? And think of it as sort of like grading the quality of the signal. So I might give this signal, like I don't know, like a 6 or 7 out of 10. If this W had come in on the other side of the trend line, I might be like 8 or 9. But 6 or 7s, if they line up with other reasons to consider taking a trade, i.e., reload zones, maybe moving average cross, maybe you have nice divergence that's developed in here. Remember, we don't want to take any trade just off of one reason, but ideally we'd like to see this structure come in on the other side of the trend line. But I could live with this signal. Everything else lining up all tickety boo. I wouldn't have a problem taking that trade there and risking against these lows, understanding that we're on the other side of this trend line. And we have a whole bunch of tags. All right. Jesus. Okay, I'll just try and quickly go through these. What time is it here? We're already a half an hour over, so let's see if we can go this. Have you identified a trade? I have 3 setups and a WS form. Let's try and, everybody, this, I don't even sure what the hell you're saying here. Steeps? I think what you mean is setups, but let's try and be a little bit crisper about this, right? 3 reasons. W is one of those reasons. So let's try and be a little crisper with our conversation here. This looks sloppy. And, if I'm spending 2-3 hours here answering these questions, take 5-10 minutes and just read back what you've actually written. See whether you've included a chart in the actual question so that this makes this as fluid and as simple as possible. I mean, just go back and read what you actually typed, please. So I'm not even quite sure what you're asking here. I think I understand. What is U process for selecting the right entry price? Well, it should be the breakout of the middle part of the W. I find after a W is confirmed on the daily chart, the price has already run away on a number of trades. Well, could be. And if it's poor trade location, then don't take the trade. You can always draw a reload zone after the W has come in and worked a stink bid off of whatever the reload zone range is. Price has already run away on a number of trades. In level 1, we learned a few different entry points after candle confirms. Enter at the candle body low. Yeah, I mean, that's all right. Really, the way I would look at it, the simple solution is, let's take this one, for example. There's a big W, big blast off. Want to try and get in. Can I hunt reload zones to sneak in? Well, in this case, no, I just didn't give it to you. And it happens in trading, right? One thing I've noticed that I see a lot of is people are expecting that the market's going to be polite and just hand you trades on silver platter, but it doesn't work that way. But here's a pretty good example of using a reload zone after a W is confirmed to get in on the trade, right? So there is the W breakout. Notice how the W breakout and the reload zone happen to realign. And of course, you could basically sneak your way in anywhere through this reload zone following this breakout because, Brian, I don't want to chase this market. Well, that's fine. Perfectly fine. So that's probably the way that I would answer that. This is nuances. I mean, if, Graham has worked himself with charts and he sort of decided what works best for him, unless he specifically laid out step by step by step by step, this is entirely Grimm's opinion. I think on balance, just to keep it as simple as possible for you guys, is just hunt those W's. If you need to change it to like a line chart to make it easier to see the W, fine. If the market breaks out, you work your stink bid at the W breakout level. If the market keeps going, draw your reload zones and have patience and discipline to wait for a retest of the reload zone. And 9 times out of 10, I see that if you've done this correctly, then this is going to get you in off of the original market structure bottom anyway. Okay, so there's a whole bunch of blah blah blah. Understanding entering the candle body low. I mean, it's up to you. If you want to use this candle body low concept, that's totally fine. Again, coming out of level 1, really all we really wanted you to learn is W's. Draw your fibs. Now you understand horizontal support and resistance. Get those horizontal support and resistance levels to line up with reload zones, and you've got yourself trade location. Can you explain entering the 70%? Okay, so basically I talked about that. What I just said there. Play the tape back a couple times, write out word for word what I just said. I think you're just gonna have to book, and really whoever asked this question, you're just gonna have to book like 100 paper trades. I guarantee you that if you had logged 100 paper trades like Grim had told you to do through that level 1, which I think is kind of impossible, but if you had done at least 20 paper trades, you would get an idea of what really works well for you. I don't even think it sounding to this, it's almost like, well, I haven't done the trades, but you just tell me exactly what it is I'm supposed to do and I'll do that. That's not how trading works. You have the basic concepts down, W's, reload zones. Now you have horizontal support and resistance and trend lines. So you've got reasons, and ideally you want to take those reasons and you want to have 3 of them. Yeah, I think so. But having said that, if you want to do 100 paper trades to get to that point, then you would understand this. You would be like, okay, I see how price action works. Okay, let's keep moving on. What is the point of different leverage factor? For instance, 5, 10, 20, 100. How people use it and why such a problem? For instance, if I'm a day trader willing to risk $200 and that $200 is, let's say, 1% of my stack, okay. Why does it matter how much leverage I use? I'm always risking the same amount. I just need to be careful and calculate that if my trade hits stops, I won't get margin called, right? Well, so that's the point. Is what you should do is say, okay, well, $200 is how much I want to risk on this one particular trade, based on where I'm entering the market and where my stop is, and I'm going to lose $200 if I get stopped out, then the math of that, if it's $5 or if it's $3.27, the math of that equation is actually going to tell you how much leverage you can use. Unfortunately, we're already 2.5 hours into this conversation. This is way too big of a question for me to answer in like a couple minutes. So if we have some more time in future classes, we can always come back to that. Yeah, so why is such a boo-boo to use? Okay. Well, so the point here is, like I said, figure out how much money you want to risk on any one trade. Then figure out what your entry is, where your stop is, how much, what number is that? And then do the math backwards to figure out how much leverage that you can use. If $200 is your risk and you enter at $1,000 and your stop has to be at $800, well, you can't use any leverage. It's got to be 1-to-1. If you enter at $1,000 and your stop is $900. Well, that's $100. And if you can risk $200 on the trade, well, now you can use 2-to-1 leverage. So hopefully that's a very simple, and you can just keep working through the process to figure out how much leverage you can use. Number 3, redundant question, but for a market structure to be valid, does a M need to have a lower high? Well, I don't know whether but the right-hand side of the M must be lower than the left-hand side. And then conversely for the W's, the right-hand side of the W must be higher than the left-hand side. Can you explain why different time frame charts sometimes report different price points, different wicks and tails? I don't know. Well, keep in mind this is calculated by TradingView, so this isn't actually the real price action. So it might be just purely a function of their algorithm. Can't really see what it is you're looking at here. Yeah, I think you got to be a little bit more specific. I guess because that says 1.2 and this says 1.25. Sounds to me like this is just a function of TradingView, and maybe the chart's broken. I would not trade something that says calculated by TradingView, PIVX on Trex. I would not trade based off of this. Very dangerous. And could TradingView have gotten this wrong? Yeah, sure. Are they going to be legally held liable because of that? No, right? They just simply say, well, look at this. This is something we just created. So be very careful with that. Just my advice, just avoid that completely. So no, I can't explain. And if anything, this is a question you should ask TradingView. Okay, number 5, gold seems to be making bot moves that never finish and top out at 1.618 extension. Can this still be treated as a bot setup taking into account the 1.68 position? Maybe. I do a full length video on the bot in the library. This to me, if anything, probably you should book like a private tutorial with one of our people and talk a little bit about bots. But do you have 3 lows? Do you have market structure to frame? Did this go 33%? What's this drawn off of? Where's 100% here? Can't really see. I have no idea what you're drawing this off of. Don't know what this is. I guess that's off of that high. Kind of hard to understand this. You should probably put the 100% and the 0 on here so I can see what levels you're drawing this bot setup off of. It doesn't look to me like this is a valid bot, so I don't know what you're seeing there. I don't see 3 higher lows that you're working with here, so I don't know whether there's a bot there. And I see maybe, I don't know what you've drawn these off of, but I see maybe 1, maybe 2 lows to work with here. So it almost looks to me like maybe you need some work crisping up how you actually identify bot setups, because I don't think you've got this correct. Remember, you have to have 3 higher lows if you're thinking bot bull. And ideally, we'd like to have some market structure. I mean, this is okay, but I don't know where you've drawn the 100%. If you've drawn it off of here, and this made a new low here, well, that's 1 low, right? It's supposed to have 3 lows. So you're not applying the bot setup correctly. Sorry. Okay. I think we made it to the end of that. I got to say, I don't know whether this is too healthy going on for 2.5, 3 hours here. I get burnt out after a couple hours. So I probably got a little snippy here near the end of this. My request to you, and maybe I'll have to be a dick in the future, but if you ask questions, don't just go, can you elaborate on? We just don't have time. The questions need to be specific, and I need for you to include charts. Like, I like the fact that this person included these and said, well, is this sort of right? And I can speak specifically to the image. But let's try and refrain from, well, can you elaborate on, or can you tell us a story about blah, 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 blah. Let's be very specific about the questions. And wow, you guys are hitting me hard here. As well, Zach is going to help out with any questions that he thinks can be relatively simply answered. It looks to me like Zach, on balance, the answers that he gave you were pretty solid. So, Zach, if you feel like answering any of these questions, go right ahead. But why don't we leave it at that for today? I can absolutely tell you that after 2 hours and 40 minutes, my voice is about to give out here. So let's leave it at that. Have yourselves a good weekend. Looks like you've done a lot of hard work here, so that's good. Let's try and refrain from the can you elaborate on, and let's try and make these questions nice and specific for the sake of time. And I think we'll probably leave the conversation at that for today. Okay, why don't we leave it at that? You have yourselves a great rest of your day, everybody. Hope I helped with that Q&A session. Maybe go back and watch this video a couple times and slow down if it's your particular question. If I still haven't answered the question to your satisfaction, maybe just PM me or Zach with any sort of follow-up. All right, why don't we leave it at that? Have yourselves a great day, everybody. All the best, and bye for now.